even on consolidation days, you're going to find that those choppy days, if you go back and look at the last hour of trading, many times you're going to find that opportunity present itself. And sometimes it can go even further in the middle of the range. But it's better to take the bulk of your trade off, as you watched me illustrate in my video last night. It's better to take the bulk of your trade off in the middle, because it could stay range bound, or like it did with me, come back up and take my stop, which was only on one contract basis, and the majority of everything else was taken off in the middle of range. And you watched me take the other one off. The remaining two, I took one off in the video of the recording. But back to the discussion of the model. So during my times when I was being a breakout trader chasing price, so I'm like Johnny come lately. Okay, I'm waiting for it to not only break out bullishly and run up 15, 20 pennies. Okay, that's $1,500. Oh, no, I'm sorry. That's 20 cents. That's $1,000. So $750 to $1,000 movement already higher. And then I'm going in and I'm buying it. That's what I was doing back then. Because in my mind, as a new trader, no experience whatsoever, completely greenhorn. I mean, I was the definition of absolutely clueless, but I'm in there with live money. Way too fast, no idea what I was doing. And I was chasing it because I was thinking, okay, Ken Roberts showed me in this book that these moves go like $20 moves, you know, in the grains. You can do that. Or silver is going to go up to $50, you know, an ounce. It's every day, every year he was promoting that. Buy silver, buy silver, buy silver. And that book really converted me into thinking that every trade I was going to get into was going to be these big blowout, huge run-up moves. So it was in my mind thinking, hey, I'm going to wait for it to break out. That initial breakout encourages me, but then I'm going to wait. I want to have further confirmation. And a lot of you actually probably had this experience too, where you can pretty much see likely to go, but you don't have the courage to actually go in when it's the best time to get in. You want to wait for it to start moving in that direction and give up a half or 3/4 of the move. And then you start saying, okay, well, I can see it's going to go to that particular level right there. And then you go into the trade. And it might go for you a little piece. And those are the wins. They're the ones that you'll feel confident in showing your friends on social media or your coworkers. But you won't share the ones where it retraces against you, which is normal, but you get either stopped out or scared and you close the trade, and then it runs to your objective. And you go away thinking, oh, I'm never going to learn this. You're never going to learn it doing it that way. And just like I didn't learn how to trade profitably by doing what I was explaining earlier, anticipating the breakout, seeing it, and then watching it run even further, and then calling that confirmation. No, that's not confirmation. That is observation of someone else doing it right and me not having the understanding, the discipline, or the foresight to gauge it when I should have. But when it would go back up into that fair value gap on my long, after it took out a high, I would be confident that I'm going to get to the point where I can get out of the trade and be break even. So what I was doing was teaching myself to be what? Late to the party and never making money. Think about that. Apply that same hardcore in the mirror analysis of yourself. Because I guarantee you, put a number 2, tweet to me number 2, if you've ever endured that or experienced it. And there's no shame in it. It's normal, because these markets are well, in a lot of ways, it's a mirror. It's going to show you yourself. And that reflection isn't going to be appreciated by most of you, because you think you look a certain way or are a certain type of person. And when you engage in these marketplaces and you put in your opinion or you associate your intellect to what these little patterns and candlesticks are likely to do next, and young men and women, they stake their whole existence and image on the fact that these candlesticks do something that relates to a profitable or positive outcome. Instead of just saying, okay, is this making me money? And how is it going to hurt me? And over time, when I was going back through all of my losing trades as a bull, because in the 90s, that's all I was doing, I discovered, because that pattern that Ken Roberts was teaching in his course, which was not really accurately described or titled, but the world's most powerful money manual and course. And it was neither powerful, okay, or enabling for me for any profitability. I've never made money with anything the guy taught. But when I took everything that he talked about and John Murphy refers to in his book, Technical Analysis of the Financial Markets, I think that is a book that everybody should have, not because the stuff in it works, but because if you take that logic and turn it upside down, you have a 90% winning rate, okay, in back testing. Go back and look at all that kind of stuff. And that logic fails. It fails. Trend lines are wonderful when it's already happened. Everybody can do that kind of thing. But the hard walk forward for traders, not only under my mentorship, but in any endeavor in terms of trading, this is hard. Not because the concepts are, unavailable, because they have been obviously explained to you. What makes it hard is your personality, your character flaws. All of us have character flaws. I'm a perfectionist. I have to be perfect. I have to be perfect. And that's what I'm pursuing. Never going to get there. But my trades, the things I'm showing, I think they illustrate above average. I'm getting into lows and getting out above old highs, vice versa. Now, I'm not doing it all the time. I take losing trades. Logic is I want to go in and I try to teach my students, where is the most logical entry point for a trade? And before that, I want to know, where's it likely to go? And if that is likely to be the outcome or the terminus to where price is going to be drawn to, can I justify a trade in the opposing direction? Because if I can do that, then I still might take the trade, but I'm not going to trade with 4.5% leverage behind it, which would be like my competitive leverage gearing. I don't always trade with that, but I do it to showcase the difference between talkers out there that talk about what they do in market replay and day-in reports that they can easily be changed and audited and make adjustments and edit it. You can't do that with TradingView. There's nothing, you can't do any of that with TradingView. And you sure as hell aren't going to be able to do that when you're trading through a live broker and using TradingView as the portal. So that's why I'm teaching the way I teach. That's why I'm in this TradingView. That's why I show you the statements. That's why I show you the results. The bottom line is you can go out there and chase all kinds of wonderful illusions that a lot of people want to trick you into believing. And yes, I made millions of dollars selling my education. I don't do that right now. I'm not going to do it again. This is not a lead-in. I'm not teaching you a little bit to get your mouth wet and then say, okay, now here's the pitch. I'm not selling anything. Nothing. It's been stressful. But I do enjoy teaching. But I want to teach you properly, because there's a way to do this incorrectly. And it's everybody out there parroting what I say. They have no idea why I said what I said. They just repeat what I said. And that's why their students get frustrated, because they can't get answers to the things that they heard me say, they then repeat, because they don't understand why I said what I said. So when I do these long rants and discussions that are very boring to someone that just wants to get in, give me a stop and give me a target, I ain't got time for this. I got things to go on internet and talk about. Those individuals are never going to find longevity or consistency. And my students, my heart is in them succeeding. And I think if you pay attention to me long enough, you can hear that. Like, I am passionate about all of you. Like, I want you to succeed. What's it going to give me? There isn't going to be a mentorship for sale. It's just the enjoyment, the satisfaction of knowing that I poured myself into individuals on the internet that I'm never likely to meet. And you have done something to change your entire family tree. And that to me is amazing. I wish I would have found somebody like what I'm trying to be for all of you. I'm not going to sugarcoat this stuff for you. I'm not going to sugarcoat it and say you're going to walk into these marketplaces and it's going to be an optimal trade entry every single time you get in it. And you don't need to worry about a stop loss. You don't need to worry about over leveraging. Just do as much as you can afford. Do you understand how irresponsible that would be? I'm telling you, I'm promising you that you're going to lose money. These young guys out there that sell courses and make YouTube videos, you never hear them talk about risk. None of them really put risk disclaimers in front of their videos, but they're out there showing their leased Lamborghinis and such. Let me tell you something. When you make, for instance, like $500,000 a week in mentorship pay, okay? How many Lamborghinis could I have purchased or even leased doing that for 6 years or so? How many houses could I have rented and pretended to be somebody I'm not? How many vacations could I went on, took pictures and had somebody go around taking pictures of me and filming me? Look at me, I'm flossing. If that was what I wanted to do, I certainly could have done so. And you didn't see it, still don't see it. Because none of that is going to deposit money into your pocket. A lot of you are trying to live vicariously through other guys and gals out there on the internet doing those types of things. When I was a younger man, that was my approach. Today, I teach with a really boring, introverted style because this is what pays the bills. This is what's realistic about managing risk. Talking about making money and not really emphasizing the underlying risk associated to doing this is irresponsible. And I want you to understand where you're going to lose. I'm telling you, you're going to lose, but I want you to know that it's assuring to know where these pitfalls are likely to materialize. Some people are not going to want to find value in that, like yesterday's entire drawn out discussion throughout the day. That is a day that will absolutely beat you down. Anybody that's talking smack, I guarantee you,